What is up, you guys? It is Lincoln here, back with another video. I hope everybody had a very Merry Christmas. And yeah, it's sticking with my previous revelation from the last video. I will not be showing anything in Robinhood anymore. I'm going to be showing you guys where I keep the mass majority of my money. Like I said in the last video, what I was doing on Robinhood was not my primary strategy, and I kind of felt like instead of just making videos for entertainment reasons only, I should be doing this more educational. And if I was you guys and watching videos like this, I would like to see what the person actually preached or what they practiced. Basically, practice what you preach, instead of just showing you what I was doing in Robinhood with that only very small amount of my overall money invested. So just for full disclosure, here is where I have my different asset classes currently. You can see the majority of my money is in individual stocks and options, primarily stocks, and then I have quite a bit of money in cash right now. I'll get into that a little bit later, and then ETFs, mutual funds, and then I have private loan. Basically, I have an employee savings plan through my company, so that is what that money is for. But obviously, you can see the two that stand out are the individual stock positions and cash. And the reason I have so much cash is basically I'm going to be buying a house or a duplex soon. I'm hoping to do a rental property, so I have some money set aside. I do have my real estate license, so I do make a commission every time I buy or sell property, even if it's personally. So that is a pretty good way to add some extra money to the down payment. And then today's video, I will be jumping into the individual stock positions in my Roth IRA. I do have two different Roth IRAs. I have one with about $4,000 or $5,000 in it at American Funds, but I will be showing you my Fidelity one, which has a little over $15,000, and where I hold basically all of my individual stock positions. So before I get into these, hopefully I don't need to say it, but do your own research. Just because I hold them doesn't mean that you should. Yeah, do your own research, be smart. These are, generally speaking, fairly small companies. I did a lot of heavy buying back in March. I primarily am a passive investor. I like to hold ETFs. I like that to be the majority of my portfolio. You can see from this graph, though, that obviously I have a lot more individual stock positions than I do ETFs right now, and that is because of the dip in March. I basically tried to buy very specific companies that I thought would recover faster than the overall market. So that is why I am so heavy. So without any further ado, let's jump into it. So I'm going to be showing you guys my smallest positions first, and then slowly working my way up into the larger and larger ones. So you can see right off the bat, I have DocuSign. I own one share of that. I was looking to get into this more. I usually buy a little bit and then I add to the position over time. And DocuSign basically skyrocketed as soon as I bought it. So you can see I'm up almost 200% on this position. I've considered buying a couple more shares, but there is another company a little bit further down that does the same thing DocuSign does, but that I think is at a little bit better price right now. So that's why that position is so small. And then I own a bit of ExxonMobil. This is basically a value play. I like their dividend, and I wanted to get a little bit of gas exposure. So that was based on the current market. Obviously, pretty small position as well. Cuervo and Maxon Solar. Also, I mean, you can see small positions. I've made big returns, pretty good size returns on these. Most of these I was buying back in March. So obviously things have recovered very well. So you can see the percentages. I'm up in these. You shouldn't think that every single pick that I do is like this. It's basically just because I bought all of these companies back in March that the percentage gains are so high. So keep that in mind as you look at this list, as I do have several really large winners. But you kind of basically have to correct that anything I would have bought in March would be up 20 or 30%, whatever it is right now. And then the last two that I don't have covered up in this section are Rambus and Impinj. Impinj is a surgical company. They basically do very fine surgeries, very small or not very invasive surgeries, build technology for that, robotics and stuff like that. So you can see a lot of these are very small companies. I like looking for companies that market caps are under 5 billion. Get that small cap. I see a lot of appreciation in these type of companies. Obviously they're higher risk, but historically speaking, for me, they've paid off bigger, and I'm willing to take some chances on these. I basically, for my individual positions, I do take a lot of chances on these, and then I typically have my passive investing, my ETFs, that I fall back on and basically trust those positions in case the individual stocks that I pick don't pan out. So that's my investing strategy. You don't have to copy it. Please do your own research and figure out what works for you and your risk reward, basically where you are in life. I'm 24 years old, so I can be very aggressive with my money, and it's not going to kill me. I'm not looking to retire immediately. So jumping into a few more. So rounding off the first half of my portfolio, you can see the first index fund, VU's International Equity. It's ex-US. So you can see I'm starting to beef up on these positions a little bit. Uber, everybody knows. ST Microelectronics, they're a chip maker. I have a lot of semiconductor chip maker. I'm very bullish on these for the future. I like the technology and I like the space. And then Dropbox, this is the one I was referring to earlier, DocuSign. So DocuSign is the big player in e-signing, but Dropbox actually owns the second biggest player. I forget what the name of the company is, but the market caps for DocuSign and Dropbox are very similar. So you basically are paying for the entire Dropbox business, and then I'm very bullish on their competitive business that they just bought that is a competitor to DocuSign. So that is why I am in that position primarily, and it will be a big holding, and I'll probably keep adding it to it in the future. And then also I have Stratasys, which is a 3D printer. You guys have seen me talk about 3D systems a lot. Same type of play, small cap company, 3D printing. And then you can see I got a little over $500 sitting in cash, and I'm not quite sure what I'm going to do with that yet. Moving into the third quarter, you can see Twitter and Micron. I've talked about Micron a little bit, so you guys know what that is. Zillow, I was very bullish on. I've started to take some profit there. It seems pretty expensive to me at this price. And then VT, that is my primary ETF. That is Vanguard's total stock market index. It buys every single public company in the world. It's as passive investing as you get, very low expense ratio. So I primarily have most of my money in there. You can see it is a bit low. Like I said earlier, I sold some out of that so I could add to the rest of these positions that you guys are seeing. And then AMD, you guys all know about that. It's the classic meme stock. I basically own this just because of their CEO. So moving into the fourth quarter, and these are the heavyweights. So you can see Wayfair right there. This is something I've also taken profits on a bit. Luckily, this is basically the same thing that happened with DocuSign. I only bought a few shares, but if you guys have seen what Wayfair's done, it's even been up around $300 a share, I think. So it's absolutely skyrocketed this year, basically since everything shut down and people started spending money on online couch shopping. Wayfair's gone through the roof. So I did own like 5 or 6 shares, but I've sold a couple of those off, so that's been a massive winner for me, obviously. And then Cadence Design Systems, they're also in the chip making software business. Very same thing, small cap. And then VBR is a Vanguard small cap ETF. If you guys don't know, small cap and value has lagged behind growth and large cap over the last 10 years. So I've basically positioned myself because I believe small cap and value will start catching up. So you'll see a couple of those different ETFs, but that is the tilt that I'm going for. And then Domo, Apple, SunPower, Google. SunPower has absolutely rocketed the last few weeks, which is why this position is so high. I didn't even realize that it was over $1,000 in my portfolio. So probably take a little bit of profit there. And then Google, I own 1 share of that. It's done mediocre. I really like their business. Basically, YouTube is a massive generator. Everybody knows Google. And I don't really see any of these lawsuits that people are bringing against them holding any water. So we will see. They might be worth more if they do get broken up, but we'll see. So those are the positions. You can see down there at the bottom my total percentage gain. That's why I chose to do this video today. I was just waiting for it to hit that number, and I figured it was perfect timing. So thank you guys for watching. I'll likely do a high-level overview of my entire investment portfolio, basically all my setups and that type of thing in the near future, so be on the lookout for those videos. If I do end up buying this duplex, I'll be talking a bit about that on here, as well as that will obviously be part of my investment mix. So if you guys appreciated the video, please hit the like button and subscribe if you are feeling generous and want to see more like it. I'll see you guys in the next one.